My name is Sadik Abubakari. I'm the country sales manager for PAX Data Centers. So PAX Data Center is an infrastructure entity that have operations across Africa. And PAX Data Center is majority owned by the African Union, which is the AfCFTA, the infrastructure arm of AU. So the intent is to have close to 38 data centers across African continent by way of localizing data and also championing data sovereignty. So the topic to be discussed is about the role of digital trade corridors, cross-border payment, and data centers in African digital economy. And basically, since I'm based in Africa and I work in an African company, I want to talk much about the African corridor, how payment is driving and what the challenges are and the opportunities within the industry, and to see how best we can elevate this discussion going forward and look at what will best suit for the African market and the entire continent as well. All right, so my next slide would be much about, can you see me? I'm presenting, all right. All right, can you see my next slide? Yeah, so this slide talks more about the opportunity and the challenges. So we are looking at within the African market, currently within the 54 countries, we have close to 1.4 billion people across this continent. And likely for us to, within the African continent, we all have come together to form the African Continental Free Trade Area, which is to champion trade among the African countries and also to elevate on the cross-border payment and to see how best we can leverage on the partnership and the trade area to champion digital transformation under the African continent. While we are thinking about this, there are a lot of key barriers today that is affecting or that is hindering this trade opportunities that we find ourselves. For instance, looking at the currency conversion right now, it's a barrier and it has a lot of multiple effects when you want to even trade among your sister or brother country. For instance, trade within Nigeria, Kenya, or that of Rwanda become a challenge because of the currency conversion rate, which is also having a problem. And also one of the key barrier is slow settlement. We don't have real-time settlement within the corridor. So it makes trade a problem when you want to pay your suppliers. It makes it a challenge for you in settling them in real time. And also looking at the RegTech side of things, that's regulatory fragmentation, is another challenge. I think that with the Free African Continental Free Trade Network, there should be an opportunity for the industry players and the regulatory body to come on board and have one regulatory framework that will help champion all this. But looking at how each market has its different regulatory framework, that is also hampering or affecting this cross-border payment, and I see it as a challenge. And also there's limited digital infrastructure. Currently, most of African businesses all host their data on cloud instead of co-locating with various in-country data centers that are dotted across the African market. And I see this happening most within the West African side of Africa, which most of these entities have their data hosted on cloud. Unlike the southern parts, Kenya is doing very well, and Nigeria is also trying to do very well on that side. So I'm looking at Africa has enormous skill and ambition, yet cross-border trade remains very expensive and very fragmented and very slow. So I think AfCFTA will be a breakthrough for this cross-border payment, but the needs in the digital backbone to deliver this. So transition, what does the backbone look like is when we talk about the data centers being the digital backbone of this cross-border payment, because without data centers, it will be very difficult to have this digital transformation and trans-inclusion around this African continent, which is also a challenge on that side. So we are looking at how best we can leverage on this opportunity to champion this cross-border payment. So this slide is going to talk much about the ability of business, government, and consumers to transact seamlessly cross borders without unnecessary delays, and also cost as well as regulatory bottlenecks. So we are looking at currently digital identity is becoming a problem, because we all know that before you are able to do a transaction from one end to the other, you must be know the customer process, which every regulatory entity is a key component of it. But right now we have a lot of fragmented digital identity solutions that are dotted across. So instead of we synchronizing on one, but it's becoming a challenge on that side. So these are things that is also affecting the basic foundation of digital inclusion and digital drive, as well as cross-border payment among the corridor players. And real-time payment too is also another key areas that a lot of the African markets players, especially regulatory bodies, are working on that side. And right now, there's the introduction of the electronic documentation and custom. Most of this custom border control have synchronized their data, so it's easier for you to fetch data on real time. So over here too, we look at the cloud and data centers. What are they doing to help champion cross-border and trade among the African continent within the cross-border areas? So the role is just to make sure that data centers help to localize the data and also bring data sovereignty so that each and every market holds their data. So that based on that, you can mine this data to come out with new products that will help champion this. So basically, the expected outcome is to faster trade, lower the cost, and bring greater economic inclusion and deeper regional integration as well. So that is how we are looking at what the frictionless borders trade should be able to champion the African continent. So I'll proceed and talk about the corridors that are integrated within this ecosystem, which facilitate both payment, data exchange, logistics, and regulatory framework. When you look at the corridor layers, especially with the digital identity, we see customer verification becomes very easier. When the payment infrastructure is working, settlement is done in real time. Custom system, it facilitates trade. Logistics platform makes supply visibility and supply chain as easy as possible. And data centers as well as internet exchange make the hosting and connectivity of all this infrastructure easier for us. So when you look at the active corridors, for instance, Ghana, Nigeria is very active, and Kenya, Rwanda is also very active on that corridor. So these are things that the African corridor is championing very well when you look at our trade partners within the continent as well as part of the world. These are things that is championing it as well. So I'm looking at some of the cross-border payment challenges and the future, what we can do to augment these challenges is one. When you look at the challenges, in fact, a lot of fragmented, like I mentioned, you as a merchant dealing with your local bank, then the local bank will have to get a corresponding bank. The corresponding bank now to also settle the supplier bank at the other side of things, and then it becomes very cumbersome. And with that, there's high fees, conversion rates, and FX become very expensive. And settlement date also takes about 2 to 5 days to settle because there's a lot of multiple intermediaries, and compliance complexity reduce the trade efficiency as we are talking about. So for me, I think with the introduction of Momo, blockchain, open banking, and CBDs, is one of the areas that most of this African market is now looking at championing so that it makes trade easier, settlement become easier, and then the cost of fees also become cheaper. So for instance, most of the African corridor players have all introduced their interoperability platforms, which is making trade easier and also settlement become real time on that side. So currently the pain of today's payment chain, every hop has cost. So looking at the cost component, then look at what it entails, and it becomes very expensive in trading among the African corridor. So this is what we are looking at eliminating from the African corridor. So why data centers are the foundation of this is very simple. Without data centers, like I mentioned the earlier slide, it becomes very difficult for we to connect and trade among our peers within the corridor. So data centers played a major role and also been the backbone of digital trade within the corridor, and it also makes it very easy, especially with secure hosting platforms. Core banking are able to host mobile money operators, fintech applications, which require resilience, are able to host their data in country. We preach about low latency because if data is hosted in country, you don't see data going outside the country that is transiting with connectivity, then coming back into the region before you're able to access your platform. But once you have everything hosted in country, it brings low latency on that. And also I talk about data sovereignty, where we know that once you have your data being hosted in country, it satisfies regulatory frameworks. So if you look at recently, there's a lot of publication from the African Union and also from the member states about data sovereignty and championing that by, for instance, Nigeria agreed that by end of 2026, this year, January 2027, all financial data should be hosted in country. Ghana has also introduced same, and I know Kenya is also championing similar thing. And also brings about business continuity and make disaster recovery real time, and you can scale with your solution and also within the trade corridor that you are doing on that front. So basically, this is what data centers champion within the foundation of it, and data centers as well as the internet exchange. You know, currently, because of the recent, I don't know whether it happened within the Asian corridor, but it happened within the African region where we have an internet blackout 2 years ago, especially affected most of us within the western part of Africa, because most of the landing cables like Main 1, SAC2, Equiano cable, the Angolan cable were all affected by the sea cut. So within this part of the continent, we have a total blackout for 3 to 4 days. But if we're able to introduce, so anybody who was able to connect it to the internet exchange that was routing traffic locally, it's champion, you still having connectivity and all your system were still up, running up and down on that side. So most of these people, it is very good for payment service providers, the banking system, the central switch to all connect to the internet exchange. That will help reduce latency as well as meet the regulatory compliance on that side. And also you can do the peering locally, which will also help champion this as well within the corridor. So after any opportunities, I know most of you are aware when the African continent wanted to introduce AfCFTA, there were a lot of bottlenecks because the Western world, because Africa is one of their major partners in terms of trade. So a lot of delays came in today to go through. Today they won't be part. Some of the member states were not even signed into the treaty. But lo and behold, those who were ready joined and the treaty was signed. And right now, AfCFTA creates the world's largest free trade area, over 3.4 trillion in combined GDP. And most of this through the payment, cross-border settlement, and cloud and data center providers. So with this free trade continental area, it's championing most of these banks, fintechs, and knows to leverage on the opportunity to trade among some of these member countries. And right now, we've even introduced fintech passporting, whereby if I have a fintech license in Rwanda, I can equally use the same license to trade or to operate in Ghana as well. This is one of the opportunity through the AfCFTA and these opportunities that is able to happen within the African corridor when it talks about trade on that side. And let me just narrow it down to Ghana, for instance. The Ghana strategic position, basically, the stable regulatory environment, growing fintech ecosystem, the strong mobile money penetration and adoption. Currently, mobile money adoption of the MOMO is almost about 87% as compared to card payments in Ghana, for instance. And also when you look at this location, it's very central to the West African region. And there's a growing number of data centers infrastructure within the Ghanaian market. And also Ghana also holds the AfCFTA Secretariat, which brings about a lot of opportunities on that side of things. So for me, I think it will be a great opportunity for Ghana to strive, looking at its position and also being the trade gateway to West Africa at large. And in concluding, I want to talk much about the digital backbone of African trade, which we all know that cross-border payments are not just financial services issued, they are digital infrastructure challenges, and data centers are playing a major role to make sure that we get this thing going on. And without infrastructure, cross-border payment cannot scale, digital trade cannot flourish, and AI compute cannot also operate. So digital economies cannot grow sustainably. With infrastructure, you see instant payment happening. Interoperability systems are also working. Data sovereignty is being, and there's integrated the African continent in terms of digital economy as well. So I'll end here and thank you all for your time. Thank you.
Yeah, thank you, Sadik, on your valuable insights on borderless trade, digital trade corridors, and cross-border payments. Thank you.